Hey, good morning, everyone. How's it going? Good morning, Aaron, Al, Steph, Mike, Thomas, Joe, Gregor. Hey, Stella, how are you? Chip, Mike, John. That's the only names I can see. I know there's more people in there. Hey, Brian, how are you? Julie, good morning. Good morning, good morning, good morning, everybody. Are we all ready for another extremely stimulating day? Good morning, Ron. I really don't suspect too much today out of the market. Here it is Friday. We're headed toward a 3-day weekend. The likelihood of something super exciting is just, I don't know if it's there. Good morning, RR, Twinkie, Jim. How's it going? I've got the SPY chart up here. We do have some people in the room that aren't normally here. Right way option folks are here while Doug is out on vacation. I want to welcome you all. So thanks for being here. Appreciate it. I'm going to kind of go over my chart a little bit for somebody that doesn't know. We'll work from the bottom up. This dotted line is the 1,000 period moving average. This second line right here, the both blue, one dotted, one solid. This is the 500 period moving average. I only have recently put these moving averages on the chart. It's just because that's where a lot of charts and the market are playing around. So I had to move to the south side of the tracks for a little while with those two moving averages. One day they will be off. One day they will. This black line right here, this is the T line or the 8 exponential moving average. The red dots and green dots, that is what we call the trend indicator. This blue line right here is the 50 period moving average, and this very light dotted red line, that's the 200, or it's what we call the dotted deuce. It's the front weighted 200 period moving average, and it's the average of the lows. And then this is the 200 period moving average. We can talk about that more during the day if anyone has any questions. As you can see, price is still well under the T-line. T-line's under the 34. 34 is under the 50 period moving average. Right there, that should tell you that the sellers have absolute and total control of the market. I'm afraid that there's not a bull in town that has any control anywhere. Their votes are currently worthless, absolutely worthless. I still expect price, the SPY here, to come down to that 1,000 period moving average. Now that doesn't mean that we can't have some kind of relief rally similar to this, or this, or this, or that, or maybe even that. We can certainly do that before we head down. But I still think this 1,000 period moving average is tagged. And honestly, I think there's more room for it to follow. We can talk about that more later today. Let's take a quick look at the diamonds. Diamonds, once again, I still think the 500 is likely to be tagged. Qs right here, 1,000 period moving average. I'm still expecting it to be tagged. IWM has already done it. Here's the 1,000 period moving average right there. And we have fallen below that. In fact, we fell below it over here. We rallied up for a test. We got a little bullish, nailed the 50 period moving average and back down, and then right below that 1,000 again. So IWM1 needs to get above 169.40 if you want to be bullish somewhere with IWM, or really we need something in the indices to say we're bullish before you go bullish, you go long on anything other than maybe a very short-term relief rally type trade. So transports are still down. They got a little excited yesterday, put in a nice little candle yesterday, but there's nothing in this chart that says, hey, be a buyer. We'll see what it does a little bit later on. And then SMH, there's nothing there in SMH that suggests the bulls are bullish. UBXY, I watched this uh, a lot. Um, I have another chart to my right over here, right over there, another chart, another monitor. And on that monitor, I have UVXY, sometimes the VIX. They're both, VIX instruments. I put UVXY up because I sometimes trade that. You can see that UVXY has a little bit of a downtrend here, but you can also see how it's trying to find a crack in it and get through. Right now, price is above the T line. T line's above the 34, I'm sorry, the 17 or the Trindicator. Trindicator is above the 50-period moving average. That's what I would call a bullish chart with a little bit of resistance. So who's going to win this battle? We'll find out. Another chart that I use a lot is this T2123. I use the 15-minute and hourly. I can tell you right now, though, nothing but the 15-minute till it gets bullish, good and bullish. And this is just highs and lows of different issues out there. It's just simply what is the difference between new issues reaching new highs, new issues reaching new lows. And if we want to be bullish, we need the crowd to be bullish. And this is what this will help us with. And something like this right here is nowhere near bullish. Let me go to an hourly and I can show you what a bullish would look like, bullish setup. And that's what that would look like right there. So when we see this moving up, Trinicator turning green, that's a sign that maybe we have a relief rally working right now. Nowhere do we have, even in sight, do we have any kind of bullish reversal, but we could see a relief rally. I don't know about today. Another one is the T2122. We talked about this a couple of days ago. We talked about this being down and starting to turn up, and I just shared with everybody something I've seen over the years with this, or with any oversold type of indicator. It can be RSI, it can be stochastic, it can be any of those. And that's all this is. It's just an oversold indicator or overbought indicator. And I just kind of cautioned everybody as we started moving up here, be careful, don't get excited about being bullish. Many times what we see with this is where we move down, and let's make this different color, blue, where we move down into that oversold area. We move up, sucking everybody in, but what we do is we come back and test, just like a chart, just like a price action chart. Now, if we start coming up again and we can hold up here, now you've got yourself a nice little oversold setup that may produce some sort of a relief rally. I say may because there is absolutely no guarantee of that. This is just an indicator that follows price, and price is the ultimate tool. So what have we got here? Really a boring day. I think the shorts, if you're short, I think the shorts are still working a little better. I would be a little cautious maybe chasing shorts today because we are a bit oversold, and that could, like I said, produce some sort of a relief rally bounce. And what happens is you end up just chasing your tail. So okay, here's take Twitter as an example. I think Twitter's full of drama. I'm not particularly a trader of drama, but a lot of other people are. And Twitter right here is still looking short to me. You can see that the Trinicator is nice and green, nice and red. Moving down, we're below the 50, we're below the 1,000 period moving average. All we need to, well, in fact, if you look at this right there, that's just a bear flag setting up. And it looks like this morning pre-market a little weakness. So ultimately on Twitter, First thing we'd have to do is get below this 36, and we'll call it 37, then below 35, and all that is a trade right there. Then we can attack this supporting level down here at 32. TDOC, I don't have any of these picked out. I'm actually just pulling these off of a live alert I have pre-market. This is a bear setup, pull up opportunity. What it is, it's a bear type setup. What it's looking for are charts that are in a downtrend, pull up a little bit, and then just simply come down. It's kind of like a I think probably everybody is familiar with a J-hook continuation pattern. This is the same thing, just opposite of that. It's like a little bearish H pattern is what it is. So there's that H pattern setting up right there. So TDOC, here's that bear flag setting up. Ultimately, we need to be below 27.60 to make any good money. This is where we maybe put some risk on with a stop. Another way to trade this is to simply wait for it to break down, watch for that little bit of a rest to the upside, and then continue to the downside. So a couple ways to attack that. Hey, good morning, Thomas. Yeah, I sent an email out last night. It wasn't this, though. It was corn. I sent an email out last night. I thought corn was a very nice chart, and I wanted to bring it to everybody's attention. I think corn is a really nice chart. And what I like most about corn is the weekly chart. I mentioned a J-hook continuation pattern a little bit. This is a bullish J-hook continuation pattern right here. And what that is simply a rally up, a pullback, and then we come back. And you see how you get a J in there, and the breakout is where you have the J-hook. Now this is the setup, looking for the breakout. Can be traded here, can be traded on the breakout, can be traded on the breakout a test, could be traded, up into here. No trick to it, no super trick at all. But yeah, corn I think is looking mighty good here. Here's the daily. The daily, you're going to see a little more chop than you are in the weekly. You can see that we've broken out here. It's pulled back a little bit. But then again, 1, 2, 3 candles up. What do you expect? And I think one should expect a little bit of pullbacks here. So this may be setting up for a nice little entry there. Thanks, Thomas, for reminding me of that. Appreciate it. Hey, Jason, Blue. Glad you guys made it. Appreciate it. Let's see here. Happy Friday, JW. Thank you very much for being here. Vern, Jim, let's see. Just some new names showed up. Good morning, Ron. Chip. ARKK, also another short setting up. That's part of that rally and pull up, that J-hook type chart pattern. This is what it would look like, if everything worked out. That's what you want to look for right there. In the end of the day, I don't mean today, actually, we need to get through these lows. It wasn't a very straight line, but we need to get through those lows. This can certainly be traded. Where would you not like it? Well, I would probably say if it came back up over this bullish candle high, that would put you over the T-line. That would make me awfully nervous. Some people might wait for the trend indicator to turn green. That might trip it for them, but over the T-line would probably make me a little nervous. Okay, with that said, let's not leave out some long trades. Let's look at them. So let me see. I've got a couple. Where are they here? Hey, this ABCL, this is a rounded bottom breakout, and I don't know if we'll do it today. In fact, I'm pretty confident we're not going to do it today. But coming up this week, this week after Monday, because Monday's a holiday, um, I'll cover in some pretty good detail. We'll have a little mini webinar on the rounded bottom breakout, and this we'll probably cover this one here. This is a nice one here. I still think it has room to move up. Just be cautious of anything long right now. Seller or buyers tend to be very short term right now. They pop up, they want to take their money, they want to get out. That pushes the stock down. That could actually be opportunity in there. PDD is one. Take a look at that. And this is a nice little, let's see here. This is another one that's giving us just right here. This is a little J hook right there, continuation pattern. And then we go from that low up. There's another J hook continuation pattern moving up. If you're concerned about the 200 period moving average, don't fret. Don't be concerned. Let it break out if you want, and then put a buy box up there like that, and then buy it up there. Nobody says you have to buy it down here. Let it break out, let it test, let it do that same old thing again. So anyway, nice chart here. There's that 500 period moving average, and look at that resistance right up here, or a good target zone. Thomas is saying CME is nice. It is, yeah. That is pretty nice here. I like the candle formation. One thing about the market these days is I would pay attention to the 50 period moving average. What may be nice right now could be a piece of garbage right there. So a lot of things that I'm looking at, if they're close to the 50, I'm not interested. I would rather them break out of the 50. If they're far away from the 50, that's a different story. Say we look at something down here, which I'm not interested in bottom picking, but as we move up right in here above the T line, that sets us up for a pinball setup, and now I'm interested in maybe a run up to, for those familiar with the pinball setup, to that 34 EMA, and then maybe up to the 50. I do like this, Thomas. I like what's going on right here, but I do not like the chart until it gets over 210.65. I looked at that one last night too. Walmart. Yeah, I'm. You know what? I'm not going to say Walmart's nice. I don't think it's nice at all. Now, to somebody, Walmart might be nice, but I don't think it's nice. Nothing about Walmart suggests we're going to go up. And if anything, I'm looking at Walmart for maybe moving a little bit lower. Now, Walmart, we certainly might get some kind of relief rally. There's no doubt about that. We're so doggone oversold in this market. A relief rally can happen. I just don't see anything bullish in Walmart right now. And there is no way, shape, or form that a double bottom is a reason to buy. It can be a condition to buy, but not a reason to buy. So I'm sorry, I just don't think Walmart's nice. Where would I think Walmart would be nice is over this right here. Then you would have a low, high, higher low. We break out over that. Then we could put together a higher high, and that could be the tradable bottom. And then this would be the target area up here around 140. So Walmart's got a lot of work to do. A lot of work to do. What else do we have here? Anyone have anything you want to peek at? If not, we'll call it a morning, and then we'll. I'm going to go get some more coffee, and we'll meet up here at 9:30 when the market opens up. Anyone have anything? All right. Nothing out there. Then what I'll do is I'm going to shut down here for a moment. I'll meet everybody back up here at 9:30, about 20 minutes away, and let's see if we can get some trouble with the market here. Okay, you guys all take care. Thank you so much for being here. Appreciate it.